Stock market analysis and projections on the S&P 500. Make sure you take a look at this slide. It gives you all the information about how we present this analysis and things you'll need to know about what we're doing and what it means for you. Stock market analysis, S&P 500, 1 to 5 months. We're going to look at the SPY. So let's take a look here as we look at that. This is the SPY, the spiders, and this is going all the way back into 2020. So we're looking at a weekly chart in here. I'll expand on it a little bit, give you an idea of the things that we're looking at in here. So the first thing I want you to note is that we're going way back here to 2020, and this rally that you see in here is what was the everything bubble. It was the market that was moving up as the government and Federal Reserve was pouring money into the markets, and it moved up so steadily that even the cyclical actions in here were what we call swamped right-hand translations. This is a cycle right in here. You could see the blue cycles on the bottom. That is the dominant cycle that has been in here, and you can see that these vertical lines show you where those cycles troughed. In other words, where the lows were or the bottoms, and cycles are measured from low to low, to low to low. And you can see the repeating rhythms that are in here. That green bracket on the bottom is a little different as it aligns up with the Russell and the European market, the FEZ, and that is due to have a bottom or a trough out over here into the late May, early June time frame. That's significant in this analysis. What I also want you to notice are these yellow ovals, and what those show you are the times where there are corrective phases in the markets. When the market is very strong, and you could see the slim ribbon the reversal scout right in here, which is gives you the momentum conditions, proprietary indicator, and when it is continuing to rise like that and only leaves a little corrective time, as you see here and here, they are very brief corrections, we'll call them. In this case, it rolled over and then had a more time to fall, and it actually broke the key level right in there, which told us it was very likely a top formed. Cycles also form head and shoulders patterns and all the other patterns, and you could see the minor cycle right in here, just beautifully shaped, and that made a left shoulder, a head right in here, and then the right shoulder as it failed early. And once that failed early and got under this level, it said there was likely going to be a decline through this minor cycle and then both cycles where they both had a synchronized trough right in there. In fact, all three cycles did at that period. I'm going to take a little closer look in here now, and you'll be able to see these last cycles right in here and what we're looking at this present time. Just get even a tighter look right in here. So what we believe is that this rally that has been going on and this low came right on time for us right over here. What we believe is that this is an upside correction and will be followed by phase two. And that means that the Great Reset phase two is somewhere way out over here. But we think that this rising phase, as you could see here and here, will continue to push the market up way out into late in the summer. Our VIX analysis, implied volatility, says that in the big picture, the decline that you see going on now in implied volatilities is likely to continue out until a major low in VIX that's due out in the late summer, early fall. That's the reason why we're projecting so far out over here. There is this cycle right in here, which is the FEZ and the RUT, which is likely to get you a little pull down right in here and also in alignment with this minor cycle. We have talked about in the short-term analysis that there were big resistances up above, and the market was likely to have a tough time getting through those. Let's take a look at that right in here, and you can see that exists right in this area that has other longer-term resistances in it. So here's that last cycle peak resistance, and you can see that coming across right over here. Because of this positive formation right over here, and because the momentum is turning up with the reversal scout and turned up significantly, it says that declines during this period are likely to be shallow. And that even if it does get down to the support levels right over here as shown, it is likely to move up again. The probabilities are very high of getting out over that cycle peak resistance right there, which is around 419 on the SPY. And then between that 419 area and 422 right there are where those short-term resistances are. And then a major 61.8% fib extension right up over here around 424, and this major peak right over here up there around 431. Now, our projection for the stock market this year, when we came into the end of the year, way back over here, was that it makes it all the way up to 430. And you can see that has been great analysis to this point. While we've looked for some deeper declines right in here to give us buying opportunities, well, those have not happened yet because the short-term and intermediate momentum is extremely strong. So that has prevented the market from being able to give much ground. And buyers are coming in all of the time when the market moves to the downside. We would expect there would be some further period out over here where it can give up more ground, and then over here it would turn up again. And you will have this major cycle in Europe and the Russell pushing up right over here. This cycle, the blue one, will still be pushing up out into this period here. And then this second minor cycle right there will push up out into the late summer also. So this period out in late summer, and that's why I said this is 1 to 5 month analysis, is the period where we expect there to be the top for the year. In the meantime, what I think is going on is really an upward channel that we see in here that, again, is the upward correction from the Great Reset Phase 1. Those people that believe that, well, this is a new bull market that's going to go to all-time highs, I think they're going to be sadly disappointed because the market made all-time highs in a period of extreme stimulation and got up to levels of 200% of GDP, which is just not likely to happen again and probably will not get close. That's why we were looking for this whole period right in here to contain the upside move in this period of resistance, and then ultimately be able to get through it and potentially get up to that 430 area or 4,300 in the S&P 500. So it's 430 on the SPY, 4,300 on the S&P 500. The very bottom of this area right here is the absolute extreme, which has this big resistance area there coming across, which is 436. I don't think that's going to happen. I think 430 is probably around the best level, and that will take a bit of a buying panic to get up there. Again, what we're looking at is the potential for some dips out into the May timeframe and then moving up again. The likelihood of getting through this short-term resistance area right there is very small, and we expect to see a lot of attempts and rejections in there until ultimately it does give ground. Support right over here is at around 402 down to 398 there, and then the bottom of that, which is short-term support, comes in around 394. So this is 402, 403. This is around 394. That is the area of support. We consider that a buy zone. We're able to get back down there because then these cycles are going to be pushing on the upside. I would not be surprised to see this correction come in here and our reversal scout remain positive because it does look like this market has the potential to stay quite strong. I want to look at the conditions that we see here in the market condition monitor. This is our market condition monitor in here, and this is an app that you can subscribe to and get, and it's just fantastic. You'll be able to get everything you want to know about conditions. This is now set up on the trader mode. There's also a time frame mode. This is looking at the intermediate, and there's also short term, there's near term, and There is also the looking at this, really a mode for scalpers that you'll really like for intraday. So, but let's just scroll down in here and you can see these conditions that you see, and you get a very good idea looking at the SPY, and you can see that it is in very bullish condition. The QQQ in bullish condition, so that has actually improved. The IWM is only neutral, and that has a reflection of a weaker Russell, and especially a reflection of banking issues, because the small cap banks are in there, and they are the ones that are weighing on that index and will probably continue to do so. And you see the Dow there also is very bullish, and that actually turned very bullish on 418 at 9:30 a.m. You can see in here, this is the change log, and this shows you just tons of things that are in this that you'll be able to see. I'm just only right now showing you, looking at the indexes, so you can get an understanding of these conditions and this app. This is a fantastic app, and remember, this is now included for 1 month for free if you do subscribe to the cycle analysis workshop. So this is showing you very strong market conditions. I wanted to share that with you so that you can see that. Excuse me. And that is why I think that if the market does correct in here, it's going to be quite shallow. And likely, if there is a significant correction in any of the indexes, it's going to be in the IWM, the Russell, because that one still looks unfinished on the downside to me. And again, the Russell does have a period right in here where it can get thrown away. In other words, some good selling in those low cap stocks out here into the late May timeframe. So this 5-month view essentially is a bit of a dip out over here into May, a buying opportunity, and a continued rally out over here into the summer time period, late summer potentially. And again, here is that cycle analysis going way, way back here to that very, very important buying panic, the everything bubble, the Great Reset Phase 1, and the upside correction that we see right now, which is likely to be followed by the Great Reset Phase 2. That comes late in the year and into next year. So that is a look at the 1 to 5 plus time frame there in the stock market. And I hope you found that extremely valuable. Please remember that our cycle analysis workshop only has 3 more days to go. This is the final weekend. So invest in this invaluable workshop and learn the type of analysis that our amazing team does. And you'll get a free level 3 membership and a free 1 month, these are both 1 month memberships of our market condition monitor. Those are non-recurring, so you will not get charged again. You can save 38% whether you're brand new or whether you're a level 3 and 4 member, and you can write to Matt at askSlim.com for those links and any other information you need to know about this workshop.